Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, January 24th. All right, well, we did get a little bit of movement to the downside, very light volume. I'm going to discount today's price action. On Friday, you know, the shenanigans happens all the time with this market makers pinning. And if you don't know what a pin is, you can email me at support@tradingmarkettechnicals.com. I'll give you a full analysis on how the pin works. A lot of people out there that they think they know what the pin is and how it works. They really don't. If you actually could calculate it and you could get a good idea and a good handle what to look at, there's a lot of good information via the options market. It tells you a lot of good stuff out there. So just to keep in mind. So we had the spider pin, I think it was about 225-ish around there. It don't have to be exactly the same. But if you noticed on the way down, we hit that level 3 times and we never broke it. And that's because that they're defending it because they want all of their options that they wrote to expire worthless. So that's really what it comes to. So on Friday, monthly expirations really discount what goes on. Well, today we did have a little bit of movement to the downside. I'm going to show you one of my other indicators that we use in our model. Again, I can't show you everything only because it is proprietary, but I do like to show you bits and pieces of it. And then, of course, there's dynamics on how it works when it's all together in one. So here's the skew and the VIX. This is the S&P down below. All right, and this is the relation skew versus the VIX. And if you could see here, on Friday we were at 1268. Okay, which is the highest since 2014, and prior to 2014 was the highest since 2007. Now, it's an indicator. Remember, you can't put all your bias to that because it is an indicator, and we all know and understand that indicators lag price. Right, price is what pays us. But I do want to show you when you can put all this together like a puzzle. You have to get a little word of caution here. Use caution. You can see on all of these little tops, we've had market sell-offs, okay? Just about every one of them, almost. And if not a sell-off, meaning a pullback, let's say, for that matter. And even in 2015, later part 2015, 2016. So this is something that you don't want to let go unnoticed, all right? Not scaring anybody, just letting you guys know that we're at an area here where the markets tend to at least give us some sort of a little bit of a pullback. Add to the advanced decline with volume. We've showed this to you before. Lower lows and lower highs. Downtrending. We're below zero now. And we're still at these highs here. So to me, we've got internals, breadth of the market breaking down. So it's just something. Not saying, hey, you can't buy, Apple or even the market for that matter for a quick little bounce intraday for the traders, for the scalpers, and any type of day trading that you're doing. This is just a word of caution because what happens is risk comes off very fast, and if you blink, you're going to miss it. And I'm not saying it's going to happen tomorrow, today. It's just something that you really need to pay attention to. We have the dollar here sitting at its long-term support area. All right, now we are pulling back here. Okay, this is a pullback, obviously. Now let's see if it can hold. If it does hold and bounce, we'll see where the next level is. But this is helping all the commodity squadron here, okay? Gold, crude oil, grains, precious metals, what have you. So keep an eye on the dollar. Now, what I want to look at is rates again. So I want to get back to the rates. And what do you have here? Clearly identify. You can see a nice little head and shoulders pattern. And you can use rates exactly like a chart. Here's the ascending triangle that I pointed out in late July. And here was the measured move, and it actually hit that back in, I believe it was October. And now we're getting a head and shoulders pattern here. So bonds, obviously, when rates go down, bonds go up, and vice versa, right? And also bonds does catch a bid when we have some indecision in the market. We have a little bit of fear creeping up, right? So that's something that I want you guys to pay attention to because right now, TLT is given a low-risk setup entry, and it's something I'm going to be watching. It isn't there yet, and it doesn't mean you can't trade it for the day if you like, but we have this base, and these horizontal bases are really, really nice to trade because you can identify your risk and reward, right? If you're up above the base and you're looking to buy this little breakout, where's your stop? It'll be below the base, so it's really easy to manage. We have our first touch literally right to the horizontal support where I put of 118.98, 119, call it. Now, what I'd like to see, and you could have taken that if you liked. But what I like to see is this bigger picture swing high right up in here at 120. If we could take 120 out, I think we'll get back to what I had mentioned, at least the top of this, bottom of this gap area of 127, and ultimately 129.80, even 130-ish. However, I do think that rates have made a generational low this summer, and I do think rates are here to stay. Rising rates are here to stay. So this would just be a reaction to whatever, any type of possible sell-off that may occur, and then I think once the market starts to get bid up again, TLT will start to roll over again along with gold. But that's something that I want to show you. You could see here again, and this is all for our premium video. You could see it's marked at 116.77 as resistance right now in the GLD. So just keep an eye on this. It is a little bit overbought in the short term. I think it needs to work off this overbought and pull back, and we need to see where the next pullback is. If the next pullback is higher low for this previous low, and this is what I'm going to be looking for to look to get involved and start building a small position in, at least to get started. This is where we look to probably buy and looking for that big move. So this is the previous low. That's that higher low I'm looking for, and then I'm looking for higher prices. Okay, right now it's just a retracement rally, and then I want to see this pullback happen, and that's how you measure the strength of any type of pullback by volume, what price is doing, and you get a better handle and a better entry. Okay, next is going to be GDX. As you can see, GDX is really following nicely. We have our horizontal line, our horizontal trend line like we did. We took out a local swing high here, and then we're looking for higher prices. Remember, watch the GDX. So GDX goes first before the metal does, okay? And then once GDX has matured its move, the metal starts to pick up steam. But anyway, this is what I'm looking for here. I'm looking for another, at least a little pullback into the channel. And if we break below the proprietary price channels here, then I'm looking for an area where we can stop, hold, and hopefully it'll be this downtrend line. If we could stop and hold here and test this area and hold and start to move higher, that'll give us confirmation of the trend line support and, of course, the higher low from this previous low. Okay? Spiders Monthly, I want to give you really a long-term picture. Really simple, guys. How do you know when the uptrend is over? How do you know when the top is in place? Well, really no one knows. No one really can tell you. And if they do, run away from them quickly as possible because they're absolutely lying to you. But what I do like to see is major trend lines in this monthly is very big. As you can see, there's two trend lines here. And I wanted to point these out to you guys. I get a bunch of emails. And what do you think? What do you think? What do you think? Are we going to get a top here soon? I look to say it this way. If price can break down below this trend line of 217, now it could move up higher. Remember, if the higher price goes and the pullback happens, it could be 218, 219. But right now, I'm looking at around 217-ish by the time it gets down here. 216 to 217, and then 203 to 205. If we can break that on a monthly basis, okay, we have to close on a monthly basis. So now you're talking a good month, right? January is almost over, so that's not going to happen. And you're probably looking at another, I'd say even, if you get a big candle like this, but even then, probably 2 months to even see if we get a breakdown lower. Now, it could happen where we could just get a big candle drop like we did in 2009, or even here in 2015 where we had a big long candle move and that broke immediately. That could happen in February, but I do think that we're a little bit away from calling any type of top to be mature. We want to make sure what we're doing and what we're saying is correct, right, based on our analysis. So I do think that it might be a little bit away. Doesn't mean that a pullback can't happen to that 217. But I do think it's probably going to be a month to 2 months out before we see any type of meaningful correction, big correction, okay? But I do see pullbacks, short-term pullbacks happening, absolutely. Spiders Daily, you can see here, this is, again, off our premium video, guys. This is what it tells us, not to do anything. We're in this range. We're range-bound here as the indicators start to roll over. And this isn't generally bearish, remember. Because we're in a range, momentum has nowhere to go but what? Unwind. So that's actually bullish because it's unwinding its overbought readings. All right, but check out the premium video, man. It's unbelievable. Guys, unbelievable. And I will be having a big announcement soon on the videos as well, by the way. But anyway, spiders, you can see here, we've gone nowhere. We're literally in a range. 60-minute, you could see that too as well, that we've gone really pretty much nowhere. We've been in a range since again, it happens all the time, since pretty much December, and I could go back and you could see how many times we've been in a range outside of the Trump rally this year. It's just pretty much it's crazy. I've all the time doing this. I've never seen anything like this where the market just literally now goes sideways. Couple up days, couple down days, but literally just goes sideways. It's just crazy. But nothing really here to look at in a 60-minute. The bigger picture 60-minute has an ascending triangle right now. I just want to show you guys. I'm going to draw an ascending triangle here off the bigger picture 60-minute. And I'm just going to mark this in here because you can really see it better. Here's that 60-minute. And if you go right here, your break is going to be right here. Here and here, which would be 225. So 225 on the break lower in spiders. Let me get rid of this. And 227 the break higher. 227. Let's call it 228. So 228 or 225 lower is going to break that ascending triangle. Either way, it's imminent. It's going to happen, guys, okay? So there's that ascending triangle, which is a bullish pattern. It just hasn't happened. We're in the middle of the apex now. So I would give it any day. We're either going to break down or we're going to break up. And this is an ascending triangle, so it's a bullish pattern for a breakout to the upside. Again, doesn't have to happen. IWM, we have a confirmed breakdown in the IWM. This is what I wanted to show you guys. 135, we broke down, and I'm looking for now a 38% retracement. That's going to coincide nicely with this uptrend line, excuse me. First target, 38% retracement, and then of course this gap fill area. And you can see, you can easily get there if we could start to deteriorate and really get some negative news out there, get some sort of a catalyst. Look at the thin zone here. The first thing I like to do is short the Russell if we could start moving lower. Okay, but that's a confirmation breakdown of the horizontal channel in the IWM. Transports, we did move lower here. Again, this is the small head and shoulders pattern that I showed you guys. That it really isn't out there. So keep an eye on that neckline of 160, 161. And last is going to be the Qs. You can see we're just kind of holding in there. We're in another holding pattern. So again, quick recap, holding patterns again in all of the markets. The weakest is the IWM. And if you are looking to do something, if we get some continued selling, some really good fear selling, if you will, start looking for the IWM short. Have a great day, guys. We'll see you tomorrow.